If I were going to sum up the market in 2025 in Santa Barbara, I would say it was cloudy with a chance of appreciation. And it was stormy at times. But what you should know, if you take nothing away from this video other than this, is that our core value, all of the homes outside of Montecito and Hope Ranch, they went up 4%, 3.5% was the core median price. And while we had months when the median home price was 2.9 million and also 1.85 in 2025, like I said, stormy, up and down, there was a whole wave. I'll show you in this video. We still saw that the average and the median were quite stable. So if you don't know who I am, my name is Alexander Stoeber. I'm a Compass agent here in Santa Barbara. I've been in the market since 2019 when COVID hit. What a crazy time. And I got in the market thinking, wow, these interest rates are awesome. Everyone should buy a home, and they should have. And in this video, my biggest goal is to give you confidence that we are stable, that we are in a good trajectory in this market, and that not the whole market is slow right now. There are bands, price bands, different levels of the market that are doing very well and are very strong, especially when compared to 2024 and 2023, and that we appreciated as a whole about 8.5% if you include Montecito and Hope Ranch. Now, it did come with some bruises and some bumps. It definitely did. But a big takeaway you should get from this video is that we actually have stable affordability. So the median price did go up, but interest rates went down by almost a full percent. So that actually ended up canceling each other out, and our payments haven't gone down if you're going to put down 20% on a 30-year fixed. But it did keep things stable, and I can walk you through what that really looks like. So, without further ado, let's jump into it. Here is the blog that I put out this week. You can check it out in the description if you want to follow along, or if you just want to read it, or you want to throw it through ChatGPT and get the cliff notes. I am not gonna fault you for that. I do it all the time. I do not mind that one bit. So, here's what I just outlined. Rates went down, core prices near 2 million. Inventory was between 2.6 to 3.9 months of supply. So you can think of it as if we got no more inventory, how quickly would our inventory theoretically come off the market? 6 months is balanced. We are well below 6 months. Times we were closer to it than others, but when it's balanced, then there's a lot. There's almost one house for every buyer in the market. Not exactly, but you can think of it like that. And in those months when supply was higher, there's going to be more discounts. You can think of the demand driving down prices, especially in certain price ranges and price points. At times it was 9% discounts. There was 11% discounts. It was 4 months, 4 out of the 12 months last year. So a third of the time it was quite low, at least 9% discounts off of what people were listing their homes for. And in the other eight, it was 93 to 97%, for example. And what you can see here, saying and a lot, but it is an and. Median home prices in 2025 we're at 2.9% or 2.9%, 2.9 million, 2.7 million, 2.9 million in first quarter. So in the first quarter, we're at, close to a $2.8 million median price. And that made us all the real estate agents and a lot of buyers, I'm sure, a little bit curious about how the year is going to turn out. Well, it definitely leveled out quite a bit. And what you should know about this, and we can go a little bit deeper into this, is that these homes were largely just a lot of homes in Hope Ranch and Montecito. It was a ton. There was like, I think for the whole year, 69 properties sold in Hope Ranch or Montecito at $8 million or more. And some of those were like, one was 60 million. There were plenty of $20 million homes that sold. So those just happened to pop all in that first quarter. Obviously, those had been on the market for a long time, and then it just, for whatever reason, we started the year off real hot. And then it trickled down quite a bit. I mean, in October it was 2 million, in December it was 1.9, and it kind of all leveled out. So what you see here is lower highs and lower lows. But where you see higher highs and higher lows is what happened from 2008 to 2025. So in 2022, we saw this peak is what you know what it looks like on the graph. It looks like a peak. It looks like we just went up from, 3 times from where it was at the very bottom at 2011. It's not the very bottom, but since 2008 at least. So 2011 to 2021, it tripled. The prices tripled, the median price tripled, and then we came down to 2.1. Then we went back up to 2.2. Tested that resistance. Well, we broke through the resistance and we went to 2.3 is what you should gather from this. And while this was a bit more rocky here in the 2025 prices per month, the core median, so no Hope Ranch, no Montecito, was pretty much around 2 million the whole time. March, it was 2.2. And this is, Goleta properties, Santa Barbara properties, Carpinteria, Summerlin. A lot of these areas are included in this. And as a more foundational picture of Santa Barbara, right around 2 million, we actually went up 3.5%. You can see this collection here. If you click this link in my blog, it'll show you all the real cool uh, houses that sold in Montecito and Hope Ranch. And there are some palatial, beautiful properties, and there is definitely a reason that these are taken out in the core, just illustrative, because these are pieces of art. I mean, every house is a piece of art, obviously, but these are not craftsmen downtown for 2 million or 1.5. This is an art collector's dream here. So check those out if you want to. Like I said, the prices definitely were up, and that wasn't because of interest rates. Not exactly. I mean, last year, the monthly percentage of homes that sold was between 30 to 40% cash. So we see here, like the year ended at 1.9 million when our interest rates were the lowest. Of course, in January, now we're at 2.45 million, so they did pop back up. The prices did, but it's not like the interest rates go down and we instantly get more demand in the market and people are acting quickly. We call it market efficiency. How quickly do buyers react to inventory on the market? Obviously going to be slower during summer months and holidays. They're not going to be around or not going to be focused on that. And how active are they in knowing about interest rates, which is what I'm here for, if you want. So here we can look at demand of properties. And in pending sales, we see in the beginning of the year, it was pretty good. We had a baseline 76, 69, 90. We jumped up in May to 104 and then jumped up again in October to 110. Remember this 110 here because we have sold homes, boom, 110 pending, 93 sold. Those are the peaks. May, we had 104 pending, 93 sold. So these homes go under contract, they close. Ideally, hopefully they do. Hopefully they're not falling out because that means that there's some hesitancy. And you can see here in sold homes that we are not even, we're just getting back up above 2022 levels, but we are nowhere close to 2021. That's 1,400 homes that sold in 2021, 1,336 in 2020. From 2020, from 2012 to 2021, we didn't see anything less than 1,000 sales, and we are just under that still. So we do have more supply that normally would trade, would sell, but our turnover is low. So the amount of properties that are actually coming on is lower than we've seen in the past or what we would expect in the past. So what you would think is that demand hasn't decreased, demand has just continued to increase or even stay the same, but your supply is just low, so there's a lot more competition. And here are the months. So if you want to picture, aside from August, I don't know what happened in August. There was just a big, decrease in homes for sale and active inventory. But this is the year. This is the distribution of when people usually list their homes is in the summer months. And you'll see here this October, like I said, 89%. This is a 11% discount, 89% of the sales to list price ratio. So people list their homes at a million, they're selling them at 900,000. That's obviously ridiculous and not a part of this. But let's say they listed at 2 million, then they were getting 11% off of that, and you end up selling for like 1.8 or something. So this here, the list sales to list price ratio is low in the same month that we had the highest amount of sales and the highest amount of pending inventory. So there was so much competition in October for whatever reason. If we look at the rates in October, 6.17. We had just broken 6.2 for the first time in a long time. We had not seen rates that low. So if you tell me rates are too high, you're not wrong, but I get it. It's relative. And also they're the lowest they've been today and in January in 4 years. So affordability is going up. But if you look at this, the rates are going down, the prices are stable, and there's huge discounts. So right now, that's the buyer leverage. That's really what you should be looking for is can you find the property that's mispriced that is going to shoo off, the buyers who would be competing with you? Because if, my general idea is that if it's on the market for 30 days or longer, generally it's more than 10% over its market price. So I would usually recommend a price cut if it's, if the average home in January, for example, under 1.5 million sold in 27 days, then at 30 days you would think that there needs to be a price reduction. And I can show you those bands as well, but that's just an example of how buyers can win in this market. You get a mispriced home, you get a meaty discount. Obviously, there were plenty of meaty discounts last year if you bought in January, June, or October. You get the best interest rate that you could have gotten in the last 4 years, and prices aren't skyrocketing. I mean, they're very stable. So what that equates to is strategic purchasing, strategic leverage that you can use. I think I can illustrate this pretty well here. So you can think of this payment index. Uh, I hope I don't break your brain with this, but essentially it's the median sales price and factored by the 30-year rate, and that creates what your payment for your principal and interest would be for a mortgage at the median home price. So in 2025, the median home price was, sorry, 2020, I mean, I just told you it's 2.3 million. So 2.3 million times 6.15, it's actually $11,372 for your principal and interest. And last in 2024, a year prior, it was $11,270. 2023, it was $10,741. 2022, $10,781. Just forget about the 2021 and before. Obviously, interest rates skyrocketed um, twice. They doubled, and the payment did double or almost doubled from there as well. So we can obviously see what happened, but over the last 4 years, we have seen a very stable median mortgage rate, mortgage payment, and that's not at the peaks. That's not at like 7%. It was at 7% at one point. Hopefully, you refinance if you did get a seven quarter, 7.5 interest rate. But just based off of where the end of the year, so I did the last day of December, where the interest rate was for the last, you know, 20 years or so. The payment has stayed the same. The difference is that the return has gone up quite a lot because of the interest. So, for example, if you'd put 20% down on a property 3 years ago, let's say in 2022, it would have been your outlay with 36 months of payments for the last 3 years would have been $911,000. I know, seems like a lot. 400 of that, would have been your down payment. And if checked your ROI, your net ROI, net-ish is what I call it, it would have been 25%, ROI on that money, cash on cash return. And the payment now, that if someone's waiting in this market, is $600 more than if they had bought back in 2022. And it the down payment went up by 36,000. So buy a house. If you want to know if the if the numbers check out to buy a house, I would say there. Obviously, I'm joking when I just say buy a house. Obviously, you should look at your situation. But in general, real estate in Santa Barbara, if you compare it to the S&P or gold is a hard one because it just like shot up. It like tripled or doubled in the last 2 years. So gold was like 137% ROI. But the S&P, has gone up 35% on the same amount of cash. So I definitely think that it's a solid bet, and obviously you're buying Santa Barbara, so it's one of the most beautiful places in the world. Let's get back to just finishing up this watch list and finishing up 2025. So in 2025, here you can see there is, we finish out, we had sales to list price ratio at 92%, and that left us with some momentum going into this year. So what we should be looking for is the new listings that come on the market. We want to know, does the spring inventory come? Do we get more spring inventory? Are the pendings going under contract, or the new listings going under contract? What's the sales to list price ratio looking like? How long does it take to sell? And what are the rates doing? So what you should know is we're still easing from last year in the beginning of 2026. The days on market are still slow. They're 56 days. The first month of the year, and it's only January, 93% sales to list price ratio. So that is higher than January of last year. January of last year was 90% sales to list price ratio, but it was also like the highest median we'd ever seen. And the pending to new active ratio, so 68% of the new homes that are coming on the market are going under contract. Those other 32%, sales to list price ratio. Yeah, there's cuts. Definitely cuts going. Then pending to active homes is 39%. So that means that the amount of homes that are going under contract that are currently active is 39%. And we would want that to be higher to show demand, or to show quality and efficiency and proper pricing, of course. It's not all in the buyers. And what we also want to watch is the stress. So currently we saw 33% of the active homes in January had a price cut. The canceled and expireds were 40%. It's quite high. It's a lot. Inventory age 166 days. This is why we're seeing this, is that homes are just sitting on the market. Either these sellers are not motivated, maybe you're not, maybe you are, who knows? But it's not in their favor to wait. Maybe it is. I mean, right now we're not seeing that it's in their favor to wait because there are so many price reductions, and you want to create more competition for your property rather than keeping it above a threshold that people are even going to see it on Zillow and whatnot. So let me just show you the price bands really quick for last year. So last year, 19% of all the homes that were sold were under 1.5 million. 22% were between 1.5 to 2 million, 23% 2 to 3 million, 19% 3 to 5 million, 18% 5 million plus. What does that tell you? It tells you that we are very distributed. We're evenly distributed across the entire market. Don't look at any of those ones below. Those ones don't count. But in general, we are we're well distributed. It's not like the 5 million plus are all of the sales. They're 18% of the sales, but they're not all the sales. And the values that we want to look at are the price bands for the month. So monthly price bands. In January, we saw that 14% were under 1.5 million. There is hope for you people who are under the median price, I'll tell you. I mean, the buyers, this bracket just needs to talk to me, or just needs to get clear, because a lot of these are also selling off the market. But the biggest sales came from 3.3 to 5 million at 23%. And it was fast. It was 25 days. The average, the median home price, the the days on market for homes that sold was 56, and this was half of that. So 25 days, half the market is what you can see here. And if we compare that to last year at this time, 21% sold in the 5 million plus range, 29% in the 3 to 5. So it's not like it was all massive. Montecito, Hope Ranch estates is actually 30% of them were the $3 to $5 million range. And those homes had set out on the market for 44 days. So it's possible it came on obviously in like end of November, and then actually ended up closing, or going under contract in December, and then in closing in uh, January, February, or March. And that's why we saw the prices go up so much. So all in all, what you should know is the market is stable, and this is the best time. This is the best time to at least be in the market, to have your eyes on the market, that we have seen stable mortgages, with the principal and interest over the last 4 years. And it's never been a good idea to bet against Santa Barbara. Even if you had bet that Santa Barbara would not recover, or that it would be a bad purchase in 2008. Obviously, I'm not, saying that it was an easy time, but if you look at this, Santa Barbara median home prices, $1 million to 845. Those people who held their homes for 6 years ended up with $100,000 more. So the idea, the real lesson here is that if you're going to hold your home for more than 6 years, 7 years, that's usually how long it takes to see a reset of the market, reset of the cycle. And obviously, if you bought in 2014, you're like, oh, could have got such a better deal if I just bought in 2011. And then you saw in another 6 years from 2014 to 2020, you went up to 1.5 and then to 2.2 million. So um, real estate is an incredible asset. It looks really good in Santa Barbara, especially. We have a great foundation of values in this area. Uh, you should be very optimistic for people who are buying a home in Santa Barbara. You should be very optimistic for people who are selling a home, especially. I just don't know where you would go. That is all I have for you today. If you want to check out this blog, if you want to reach out to me and chat more about what the price bands look like for your house or for your purchase, then please reach out. I would be more than happy to meet with you and talk with you more about what's going on. If you stayed to the end of this video, I love you. Peace.